Let's jump right in. Veracity's VRA token, wow, it's been absolutely on fire lately, hasn't it?
It really has.
We're talking, what, about a 30% jump in just the last day and something like 65% over the past week. This is early May 2025.
Yeah, pretty staggering numbers.
So the big question everyone's asking is, what's actually fueling this? And maybe more importantly, is it sustainable? Some people are even starting to draw comparisons to Polygon's MATIC's huge run back in 2021.
That MATIC comparison is definitely popping up. And honestly, looking at the information you provided, it seems like there could be some fundamental shifts happening with VRA that might justify some of this momentum. It's not just hype.
Right, more than just price action. We're talking structural changes to the token itself.
Exactly, a change in how it actually functions.
Okay, so for this deep dive, we've looked through all the materials you sent over the official roadmap, on-chain data we could find, news articles, community chatter, the whole lot. And our mission here is really to get our heads around the implications of Veracity's big move, this upcoming proof of view, or POV, token migration. How this new dual token system might reshape things for VRA.
Okay, so the absolute core of this, the big change, is that Veracity plans to move roughly 90 billion POV marker tokens. They're migrating them off Ethereum.
Off Ethereum, okay. Where are they going?
Onto the TRON blockchain. And the roadmap pins this for Q2 2025, so pretty soon, potentially.
Right, and this creates a sort of two-token system.
Basically, yes. You'll have these POV tokens living on TRON specifically for their ad tech business. Tracking ad views, ensuring transparency there. That's their purpose.
Got it. So POV on TRON for the ad data side. But what happens to the VRA token, the one people actually trade and hold?
That stays put. VRA remains on Ethereum. It continues to be the main utility token for the Veracity ecosystem. But, and this is the really crucial part, after this migration happens, those 90 billion POV marker tokens, they will no longer be counted in VRA's official supply metrics on Ethereum.
Okay. So they're essentially being separated out from the VRA total supply figure that everyone sees on, like CoinMarketCap.
Exactly. Think of it as a major supply-side clarification, or maybe even supply-side revolution, as some won't put it. It removes a huge chunk of tokens that were technically counted but weren't really VRA in the traditional sense.
A supply-side revolution. I like that. Okay, so these marker tokens are off the books for VRA supply. And the roadmap says Q2 for the TRON mainnet launch, but they're being careful on the exact date, right? Waiting for integrations.
Understandably so. They want everything lined up, all the integrations ready before they pull the trigger and announce a specific date. Makes sense.
Sure. And didn't they already do something with the supply earlier? A big burn?
They did, yeah. That's another piece of this puzzle. Veracity burned about 10 billion VRA tokens previously. They call it eliminating a war chest, sort of cleaning the slate in preparation for this new fixed supply reality.
Okay, so 90 billion POV tokens moving off the VRA count, and 10 billion VRA already burned. What does that leave us with for the actual VRA supply?
The net effect is a much, much clearer picture. We're now looking at an essentially capped circulating supply for VRA right around the 10 billion token mark.
10 billion. That's a huge difference from the old number.
Massive. And the major data sites like CoinMarketCap, they've already updated their figures to reflect this. This is important because, that old figure, over 110 billion,
yeah,
it could easily create confusion, maybe a perception of massive potential inflation or dilution, even if those POV tokens weren't meant to circulate like VRA.
Right, that perceived overhang could definitely have weighed on things.
Sure.
So now it's clear, roughly 10 billion VRA max. Why is this clarity being seen as so bullish?
It just removes a major layer of uncertainty, doesn't it? Investors can now look at VRA and understand, okay, this is the maximum supply on Ethereum. That fear of some huge unforeseen inflation hitting the market is basically gone.
Makes sense. All the VRA out there are the actual utility tokens, no more ghost tokens in the count. That scarcity becomes much more real.
Precisely. And inherent verifiable scarcity is often a very powerful driver in crypto markets.
And it's not just about capping the supply, right? I saw mentions of deflationary tokenomics. What's happening there?
Right. This is another key aspect. Veracity has committed that after this migration, there will be no new minting of VRA tokens, period. The supply is fixed around that 10 billion level.
Okay, fixed supply.
But they're going a step further. They're planning to implement discretionary quarterly burns of VRA. These burns will come from their reserves or potentially from revenues generated.
So the total supply won't just be capped, it could actually decrease over time.
That's the plan. It puts VRA on a potentially deflationary course, where the number of tokens gradually reduces, which, all else being equal, could put upward pressure on the price of the remaining ones.
And they kind of proved their intent with that earlier 10 billion burn, didn't they? That was reportedly one of the biggest burns in crypto history at the time.
It certainly was significant, yeah. It definitely signaled a strong focus on delivering value back to token holders and managing the supply proactively.
Okay, so capped supply, deflationary burns. What else is factoring into this? Staking seems important too.
It is. They've also extended their staking program, the one offering 15% APY through VeraWallet. That's now running through March 31st, 2026.
15% APY is pretty attractive. How does that connect to the supply picture?
Well, think about it. If a large number of holders lock up their VRA and VeraWallet to earn that 15%, then those tokens are effectively taken out of the actively traded supply on exchanges. This increases scarcity, right? Reduces the float.
Less supply available to buy.
Exactly. So if demand picks up, even moderately, it could have a more pronounced effect on the price because there's less readily available VRA to meet that demand. Maintaining that high 15% rate also kind of signals confidence from the team, doesn't it? Suggests they believe their model can sustain it without needing to print more tokens.
Okay, so we've got the POVA-V separation, cleaning up the supply number, the hard cap around 10 billion, the potential for deflationary burns, and strong staking incentives locking up supply. It's like a convergence of factors.
It really is. And it seems the market is finally starting to piece this together and react, hence that price surge you mentioned at the start.
Yeah, the 30% in a day, 65% in a week in early May. I saw an analyst on X or Twitter highlighting exactly these points. The supply cap clarity, the staking extension, plus a new Bybit futures listing.
Right. What did they say? Something like,
Veracity is leveling up in crypto ad tech bullish momentum building. Pretty direct.
Yeah, sums it up well. And the trading volume spiked too, right?
Hugely. Around $43 million in 24 hours reported at one point, which compared to its market cap back then of maybe $28–30 million is really significant. Shows a lot of activity, a lot of interest.
Definitely indicates strong interest, whether it's trading, accumulation, or just speculation based on this news.
So let's quickly recap those metrics from early May 2025. Price around 0.0030. Circulating supply now reflecting closer to 9.6 billion VRA. Market cap, therefore, around $29 million, still very much a microcap.
Important to remember that microcap status, high risk, high potential reward.
But the key change, the fully diluted market cap, is now basically the same, around $30 million. Because there aren't, tens of billions of other tokens theoretically waiting in the wings anymore.
Exactly. That clarity on the fully diluted valuation, FDV, is a game changer for how investors might model its potential. It makes valuation more concrete.
Yeah, like hitting a $100 million market cap now means a $0 one price per VRA. Before, with the old 110 billion number floating around, that same market cap would have meant a tiny fraction of a cent per VRA. It makes those price targets feel much more attainable, doesn't it?
Absolutely. It simplifies the mental math and removes a major psychological hurdle. And this actually brings us nicely to that Polygon comparison you mentioned earlier.
Yes. MATIC's run in 2020, 2021 was legendary. Over 100x, wasn't it?
Something like that, yeah. An incredible performance. And there are some really interesting parallels in how supply dynamics played a critical role there, which might offer some perspective on VRA now.
Okay, let's break down those parallels. What's the first similarity?
Well, first off, supply cap. Just like VRA now has a clear cap around 10 billion, MATIC always had a fixed maximum supply of 10 billion tokens right from the start. That finite number was known.
Okay, both capped at 10 billion, but was all of MATIC circulating during its big run?
No, and that's an important nuance. During that 2020-2021 surge, maybe around 7.5 billion MATIC were circulating by early 2021. The other 2.5 billion or so were subject to vesting schedules, meaning they were released gradually over time, mostly through 2022.
So not all at once, a predictable release.
Exactly. That predictability was key. Investors knew tokens were coming, but it wasn't a sudden shock supply dump. It built confidence. Now, compare that to VRA post-migration.
How does VRA compare?
This is where VRA's situation looks potentially even, tighter. After the POV tokens are moved, essentially 100% of that 10 billion VRA supply will be out there circulating, held by users, staked, or in foundation reserves perhaps, but out. There are no more scheduled unlocks, no big vesting cliffs looming.
So arguably an even clearer, more immediate scarcity picture for VRA than MATIC had during its initial climb.
You could definitely make that argument, yeah. From a pure circulating supply standpoint, VRA's setup post-migration looks very defined. No hidden corners.
Interesting. Okay, what about staking? We know VRA has the 15% APY incentive. Was staking a big deal for MATIC, too?
Hugely important for MATIC. A very significant chunk of its circulating supply was consistently staked to secure the Polygon network. People locked up their MATIC to earn rewards and participate in validation.
How much are we talking?
Estimates vary, but at times during 2021, it might have been somewhere in the range of 30–40% of the circulating MATIC supply locked in staking contracts.
Wow, that's a lot taken off the market.
It is. And that reduction in freely tradable supply likely amplified the price impact when demand started surging. Fewer tokens available on exchanges means buyers have to bid higher.
And you see a potential parallel with VRA's 15% staking.
It's a very similar incentive mechanism, right? High APY encourages locking tokens away. If VRA sees significant uptake on its staking program, which seems likely with that rate, a large portion of its supply could end up in Vera Wallet, not on exchanges. That creates the potential for a similar supply squeeze dynamic we saw with MATIC.
Makes sense. Limited supply, reduced float through staking.
Mm-hmm.
Now, what about the demand side? What actually drove people to want MATIC back then?
Oh, it was a perfect storm for Polygon. You had the DeFi summer bleeding into 2021, NFTs suddenly exploded in popularity, and blockchain gaming started taking off. Polygon offered a faster, cheaper alternative to Ethereum for all these things.
Right. Ethereum gas fees were getting crazy.
Exactly. So developers and users flocked to Polygon. This created massive genuine demand for MATIC tokens needed for transaction fees, gas, for providing liquidity in DeFi protocols on Polygon, and of course for speculation on the network's growth. That utility drove the demand side of the equation.
Okay, and for Veracity, the demand drivers are different, obviously. It's ad tech with Veraviews, maybe esports integrations, video platforms using their tech.
Correct. Different sectors, but the core economic principle is the same. If Veracity gets real traction, if major advertisers or publishers start using Veraviews at scale, or if their other ecosystem projects gain users,
then demand for VRA could increase for paying for services or staking for features or just investing in the project.
Precisely. The key parallel is if you have that tightly controlled, potentially shrinking supply we discussed, and then you layer on increasing demand due to real-world adoption. That's the classic recipe for potentially significant price appreciation. Limited effective supply meets rising demand.
Got it. What about token burns? MATIC introduced burns later, right? How does that compare?
Yes, good point. In 2021-2022, Polygon implemented EIP 15839, the same mechanism Ethereum uses. This meant a small amount of MATIC was burned with every single transaction on the network.
So it became automatically deflationary based on usage?
Essentially, yes. Once the final vesting tokens were released, the amount burned through transaction fees started to outweigh any negligible inflation, making MATIC net deflationary. The more the network was used, the more MATIC was burned.
Veracity's approach is different, though, with the planned manual burns.
It is different mechanically, yeah. No automatic protocol-level burn per transaction for VRA. But the intended outcome of those discretionary quarterly burns, combined with the hard cap and no new minting, is similar. A net reduction in the total VRA supply over time. So both projects ended up incorporating a deflationary aspect just via different routes.
Okay, and the last comparison point, market psychology. How did MATIC's supply story play into its rise?
I think the narrative was incredibly powerful. You had this clear message, fixed supply of 10 billion MATIC ever. Combine that with the visible, explosive growth in usage and partnerships.
People realized it was becoming scarce relative to demand.
Exactly. The narrative of finite supply meets infinite potential demand really took hold. It helped propel MATIC into the top 20 cryptocurrencies by market cap. Investors love clear tokenomics, especially scarcity and deflation.
And now Veracity seems to be trying to build a similar narrative. Only 10 billion VRA, and it might even shrink.
That certainly seems to be the message they're crafting. By finally separating out those POV tokens and committing to no more minting plus burns, VRA is suddenly ticking a lot of those sound tokenomics boxes that investors look for. They remove that ghost supply confusion.
So pulling this all together, looking forward for VRA, this whole POV migration and tokenomics overhaul, It really feels like a potential turning point, doesn't it?
It certainly looks that way. It potentially ushers in a new era characterized by scarcity and much greater transparency for the VRA token.
And that clarity around the supply, the 10 billion cap, should boost investor confidence, make valuation easier.
I think so, yeah. Just like having a clear, fully diluted valuation help people model MATIC's potential, even when it reached a massive $20 billion market cap. Eventually, VRA now has that same benefit. The risk of unexpected dilution impacting valuation models is significantly reduced.
And while VRA isn't Polygon, those potential Polygon-like dynamics from the supply side, they could still be quite bullish if Veracity executes on the adoption front.
That's the core thesis, isn't it? If Veracity can successfully grow its user base in ad tech or its other verticals, the limited and potentially decreasing supply of VRA could lead to outsized price effects compared to a token with high inflation. It's that classic crypto scarcity play.
We've already seen the market reacting positively to the news, and I know traders are looking at charts, eyeing those previous all-time highs around $0.08. That's like a 25x from the recent 0.003 price.
It is, and the crucial context there, which we touched on, is that the previous eighth hit was hit when the market thought the supply could be as high as 110 billion.
Right, so reaching the same market cap today with only 10 billion tokens would mean a VRA price significantly higher than $0.08.
Exactly. The per token price potential at equivalent market caps is much higher now.
Of course, we need to inject some caution here. This isn't guaranteed. There are risks, right?
Absolutely. The migration itself is complex. There could be technical hitches, delays. That's always possible with major blockchain upgrades.
And VRA is still a microcap. That means higher volatility inherently.
Definitely. And its ultimate success still hinges on actual adoption. Can VRViews genuinely capture a significant share of the very competitive ad tech market? That remains the fundamental question.
But from a purely tokenomics standpoint, the inflation risk that might have worried some potential investors before seems largely addressed now.
It seems significantly reduced, yes. They've created a much stronger foundation tokenomics-wise. Now the focus shifts heavily towards proving the utility and driving that demand side.
Okay, so wrapping up, the main takeaway here seems to be that Veracity's big strategic shift, separating POV, capping the VRA supply, adding burns, fundamentally changes the investment landscape for VRA.
So I think that's fair to say. It creates a very different proposition compared to before.
And while acknowledging Veracity's unique path and challenges, that parallel with Polygon's history, driven by similar supply dynamics, is certainly food for thought.
It provides a compelling case study for sure. History doesn't repeat, but it often rhymes, as they say.
Right. So a final provocative thought for you, our listener, to consider. With this newfound clarity and potential scarcity baked into VRA's tokenomics, how might that, combined with if Veracity achieves significant adoption in the ad tech space, influence its long-term place and value within the wider crypto market? Something to think about.
Definitely. And it probably makes sense to keep a close eye on Veracity's official channels for that exact migration date announcement, and then watch the on-chain data as this new era for VRA begins to unfold.